Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked with a little webinar today where we're going to go over a bearish engulfing line sell signal that was triggered in the Euro US dollar Forex currency cross rate. Before we get into that, we're going to real quick just pull up our disclaimer to remind you that this webinar is for illustrative purposes only. And now let's get to the meat and potatoes here. So we have the Euro US dollar Forex currency cross pulled up here on this chart, and you can see that Friday's session probed newer move lows and settled negative on the day. And the day before, on Thursday, the first trading day of the year, the Euro US dollar had closed and made this pattern right here. This is called a bearish engulfing line. It's a sell signal. It's a Japanese candlestick pattern. It's also a very reliable reversal signal. So when the trend has been going up like this, you can see the long-term, intermediate, and short-term trend has been bullish and pressing higher move highs into the new year. But then when we had the first trading day of the year, we had this big sell-off. So when you have a body like this where it opens where the market had closed or is just above that, and then it takes over the whole body of trading from that prior bar, that's how you generate this signal. It's called a bearish engulfing line. So this sell signal, where does that have us going? Well, right now we know that this is a counter trend trade. The overall trend is bullish. We are not necessarily bearish overall this market, but for a short term we are bearish, looking for a correction that is obviously unfolding and had continued through on Friday to probe this low. But as still, remember that from this low here we had higher move high, higher move low, higher move high, higher move low. Last higher move high was exhibited on the last trading day of the year right here. And as you can see, the market is now in a corrective phase. But this is right now, we're looking for a higher move low because right now it's a bull trend. So we don't want to try and pick a top or a bottom. That's something you never want to do. And so right now we're just looking for a correction. So where does this correction target? Well, right now the steepness of the overall trend on this lower rising support line here, this is a pretty good slope for a trend to continue forward. It's not overly there's not a lot of momentum to the upside, let alone the corrections aren't really severe. It's just a nice little upward trend with higher move highs and higher move lows. So with that being said, if we hold that trend, then this target zone right here, this downside target zone, where the top is about $1.1108 down to $1.1076, this area right here, that puts us still above this last higher move low. So if the market comes down in here and bottoms and finds some good support, this would be a nice little spot for the trend to then resume. Does that mean we're going to hit this target area? Not necessarily, but the dollar index currently is in a corrective rally mode. So with the dollar index being in that mode, that kind of helps to add momentum to the bears for the euro as the US dollar gains strength. Now, if the US dollar index is only in a corrective mode, that would also help for this euro US dollar currency cross to kind of bottom around here. And even if it falls through this target range, it's likely that it's going to bounce off of this lower support line. So is it possible to take out this initial support line that's a little bit steeper? Absolutely very possible. However, the trend right now is very strong with bullish momentum, so I'd be very cautious being a bear. So if you are a bear, what do you look for? Well, this last higher high with a top at around $1.1240, this is where you would look to be for your risk if you're a bear. You don't want to be short above this line. So what does this set us up for as far as for traders? So what do you do for Forex, futures, and options traders? Here's how you can work this trade as we start the new week off. Right now it's Sunday. It's in the beginning of the early part of the afternoon, Chicago time, so we still have a few hours before the Forex markets open up, as well as the futures markets. So we have all kinds of opportunities everywhere from the Forex markets, the futures markets, the futures options markets, as well as the binary options markets. So we'll start with the FX. If you're looking to short anywhere from this close from Thursday, which is at $1.1172, kind of right near this caramel colored line right here, just below that. If you can get a chance to sell anywhere around that area or higher, that's a good opportunity with a good risk reward ratio for targeting this lower downside support zone. Reason being that the closer we are to this high up here, the bigger the risk reward ratio is, and your risk is then limited. So for outright Forex traders, you would look to be short if you're not already in here. I would be leery of selling closer to this downside target zone because there's not much left, and if it snaps back, especially back towards it to make higher move highs, then your risk reward ratio is out the window. So you want to, if you can get back in the trade up here in the Forex markets, that would be good. Same with the futures. Now the futures price is going to be a little bit different than it is for the cash market, but it's still in the same mode. So if you see the futures and the Forex markets get a rally Sunday night into Monday morning, and you have a chance to sell around this $1.1180 area or somewhere just below that, that would be a good opportunity, giving you that good risk reward ratio for this downside target. Otherwise, if the market opens up around where it settled on Friday or even low, then you really have to look at options plays. That's where I would look at either futures options, where you could sell credit spreads above the market, or you could look to, depending on the pricing, look at some different various strike prices for puts. Options trading, futures options trading, we could spend a whole half hour just on different trades for that. So if you're an options trader, you know what to do. But I'm just giving you examples. You know how to price them out. So yeah, credit spreads above the market, especially any strikes that put you above this $1.1240 or right around here. And the same thing is for binary options. So if you have, for instance, any strike prices that are around the $1.12 area up to $1.1240, you would be looking for the market, especially on a weekly option, because we're starting on Sunday, giving yourself a few days of trading, buying time actually. You would probably look for strikes around, like I said, above the $1.1240. So I think there's binary strikes would be around $1.1225 to $1.1275. So somewhere in that range, you'd be looking to sell those. If you are closer to the market here, like around $11.75 to $1.12 even, or down to $11.50, you probably will have a little bit more of profit potential in those strikes. But remember that we could spike down in this target zone and then come back up really quickly. This market is a bull, so this is a counter trend trade. If we were looking for a buy right now that was going with the trend, then I would say there's a little bit more opportunity and a little more risk that you could take on. But since it's a counter trend trade, I would say, especially with the binary options, look to sell the options that are closer to the original sell signal and closer to your risk level. Anything that's down near this target zone, I think you'll start to run into some issues where you may have a profitable trade, and then the smartest thing would be to take a profit as soon as you can in that kind of situation. But that's not the way to trade. But if you're looking for just a quick intraday type of trade or something like that, that's probably something that will be you'll have the opportunity to jump on over the course of the next few sessions. Now, one thing you want to be considering is that this downside target zone right here, we're coming into the Brexit vote for the UK, and it also obviously affects the EU. So as we probe support down in this target area, and especially as we get through the course of this first full trading week of the year, you may start to see volatility drop in the euro and the pound, meaning that any moves are less likely to be exacerbated, and the range for the euro US dollar as well as the pound US dollar may start to become very contained. So for directional and swing traders, I think right now you have your last little bit of opportunity for the month, and then hopefully we hit this downside target zone, and once the market comes down into this area especially, I think you're going to find a lot of support, and you might start to see a range trade between this $1.1240 at this upper part where this high was, and also where this last higher move low was right here. So you can see these two yellow pivot lines at $1.1064 and $1.1240. It's not that wide of a range, but the euro US dollar hasn't been trading in a very wide range for basically the last year. We did have a nice rally move during the holidays. That was one of the biggest trading days, trading moves that happened in the euro US dollar over the last 6 to 12 months. So the average true range is pretty quiet. That being said, that gives us, as far as if the range stays that tight and the volatility stays that tight, as long as this bearish correction is correct and true, then you're probably going to see it take about a good 3 to 4 sessions going into the end of this week to touch down in this target zone. And then that will be a good spot to find support and then get a little bit of a rally, which basically would contain trading somewhere in this $10.64 up to basically where this caramel line is, around $11.80, which is only a little bit over a full dollar worth of range in the US dollar. So basically, what is it? That's 120 pips. Not the biggest range to work with, but you have to take what the market gives you. And right now, the volatility in the euro US dollar as a whole has been very, very tight. So recapping this bearish engulfing line sell signal, when you have the market rallying up like this has for multiple weeks, let alone actually over a month, you have a signal like this that's generated. It usually gives you a good opportunity to have a counter trend trade for at least 3 to 10 sessions, depending on the volatility in the market. Right now, I would say you probably have a good 3 to 7, 8. Like I said, we're coming into this Brexit move down here. This is what this black line is. This is the date for it. That's a big deal. So we know Brexit has been something they've been talking about forever, but this is finally going to happen. Now they have to hash out all the trade issues and whatever. How long will that take? Well, if it goes like it did between the EU and Canada, it could take 7 years. But at least we won't be talking about Brexit. We'll be talking about post-Brexit. But the word Brexit is going to be probably part of our vernacular and terminology in the trading industry for still yet a few years to come, unless they could somehow just copy the Canadian deal for the UK, which is kind of what Boris Johnson is shooting for. But I would say that the EU, since they're very unresponsive and don't want the UK to have their sovereignty, that they're going to continue to make the trade barriers very difficult unless it starts to impact them, where they start to see that they need the trade with the UK. But those are other fundamental factors that we cannot really predict, and we'll see what that happens as it unfolds. It's definitely going to make the euro US dollar and the pound US dollar trade interesting over the next 6 to 12 months. But right now we're looking at the next few trading sessions into the end of this month. So this bearish engulfing line sell signal, we're targeting this downside target area, and it's in between these two slopes here, upward sloping support lines, and that's a really nice area to look for a nice bottom. We'll get this hopefully solidify a bottom here, and then we'll start to see a little bit of a rally, looking for another move to challenge this last previous higher swing high. And if you want to learn more about how to execute this bearish engulfing line sell signal, you can see that we're on the Forex-Trading-Unlocked.com website. We're on the workstation page, but any of the pages on our website, if you toggle all the way down, you can find access to high probable Japanese candlestick patterns, and that will get you on your way to learning how to implement these patterns. So right now we're giving you this downside target zone. If you want to learn how to actually execute the actual target and risk parameters for the Forex, the futures, and the options markets, read the book, or you can wait for the next signal and we'll have another video on it in the after fact for you to follow and see how that unfolds. And with that being said, I want to thank you very much. Check us out all the time at www.forex-trading-unlocked.com and subscribe to our YouTube channel so you can get these videos and notified when they out right away.